focusing on going forward, retargeting the 5 trillion economy. Non-banking financial companies, or NBFCs, play a significant role in promoting inclusive economic growth by extending low-cost credit to informal and micro, small and medium enterprises, also known as the MSMEs, and unbanked customers. The sector accounts for nearly 17% of the total credit in the country. The Prime Minister had earlier announced the vision of building a $5 trillion economy by 2024. In this panel, the leaders will discuss how the NBFC sector is playing an instrumental role in maintaining India's growth momentum and achieving the targets of a $5 trillion economy by 2024. May I request Mr. Abhijit Ray, co-founder and managing director, UC Inclusive Credit, to join us on stage, who will be orchestrating this discussion along with the other panelists. Ladies and gentlemen, please welcome Mr. Abhijit Ray. Can we have a round of applause, please? I'd now like to invite Mr. Mehran Tata, Managing Director and CEO, Edelweiss Retail Finance Limited. Can we have a round of applause, please? Welcome, sir. I'd now like to invite Mr. Amit Sharma, Managing Director and Chief Executive Officer, Satin Housing Finance. Welcome, sir. Thank you so much for joining us today. Mr. S. Arendra Kumar, Executive Director and Chief Executive Officer, IKF Home Finance Limited. Welcome, sir. Thank you so much for being here today. Mr. Rahul Gupta, Chief Executive Officer, Avanti Finance. Welcome, sir. Thank you so much for joining us today. Mr. Aditya Damani, Founder and CEO, Credit Fair. Welcome, sir. Thank you so much for joining us. Mr. Ajit Kumar, Chief Operating Officer, Credit B. Welcome, sir. Thank you so much for being here today. And Mr. G.S. Agrawal, Chief Financial Officer, Shriram Housing Finance Limited. Welcome, sir. Thank you so much for being here. I'd now like to hand over it to Mr. Abhijit Ray. Thank you, sir. Please take the discussions forward.
Good morning, everyone. A great start to the panel. What Maheshji told, I think, gave us quite a clear overview of how the collaboration is working really well from the industry side with the government and also the regulator to build a sector which is very resilient, a sector which actually will take the next level of growth for the country. See, finance is the backbone of an economy, and if the finance flow is not enough, businesses cannot grow. And being people from the NBFC sector, we know this very well. However, there are certain glitches which we have seen in the past. The question is what we need to do to take it to the next level, which is what our Prime Minister Ji has already said, that a 5 trillion economy, and that too by 28-29. But that also means that our GDP has to grow by 9%, which is a tall order. But to grow this economy at a 9%, it's not about just finance. It has to be the other infrastructure which needs to be developed. Whether we talk of the road infrastructure, which Gadkari I understand is doing really well. It has to be about industries coming up continuously. It has to be about different level of policy changes. We are seeing a tremendous amount of focus on the EV side. As you see, the adoption of electric vehicles, which also saves one side the pollution and makes the country much better. And also the use makes the long-term cost much lower. So I think with that background, if we see, we are penetrating in a very, penetrating when I say of Bharat, what even Maheshji was talking about, even doctor was talking about Akshama earlier. The Bharat we are talking about is the one which earlier used to call financially excluded, right? The complete excluded group. Now I think a lot of financial technology companies are here, or fintechs are here, who have already started reaching them and reaching them in a big way, whether it is through cooperation, collaboration, or even directly. So approaches are different. The route taken by different people are different. The question is, the market is so large. How do we address this? Now I'll give you a bit of a global snapshot of where we are as a country. And the vibrating ecosystem in a country can develop when the funding comes, right? Every entrepreneur who's setting up a business at the end of the day doesn't come with a background of strong family support in terms of capital. So most of them will need, and many of them are professionals who have not built that well themselves as well. So many of them need tremendous amount of capital to build this, right? And so the capital flow is very important. And today, we are at a juncture wherein we are at a very, very unique and strong position. China today is generally out of bound for investors for multiple reasons than one, right? Which is the largest economy. If you look at it, BRICS, we choose to call Brazil, Russia, India, and China. So China is off. Russia, with the war going on, no investor can put up money. Political risk is very high, or geopolitical risk itself is very high. Three is, the Brazil going through another challenge there. Even any country in that continent is struggling now. Most of, not any, most of them. So where does the money go? Where will the money go from the investor side? It has to come to India, there is no choice. Which means that we are in a favorable condition from a capital flow perspective. Obviously, is it easily available? Say you go out to the market, you'll get the money? No. You have to build the right business model, the right structure, the right incentive structure for the employees, for the people, for the stakeholders. And the center of everything is our clients. If we forget that we'll go on milking clients, build businesses and not think of them, then there is also, a flaw in this thinking process. So I think all said and done, anything we'll do will center around this client. And whatever we do and whatever Maheshji just now told, very interesting word he used was competitive collaboration, right? You are competitive with each other as you're on the ground, but you have to also collaborate. And great to see that FACE has come up as the industry body for the fintech sector. See, if you see the microfinance sector growth in the last 2 decades, one was pre-Andhra crisis, next one post-Andhra crisis. The role of a self-regulatory organization is tremendous. As FIDC is doing for the entire NBFC sector, there are sub-sector approaches like the FACE can do for the fintech sector. Lot of questions, lot of doubts on what rate we should charge, how the APR has to be calculated. RBI has come out with guidelines now, which makes life easier. We'll get into a bit of details on that. But I think the advantage today for us, especially for me sitting here, is much easier when I see a eminent group of people in the panel. I couldn't have asked for more. What experience they bring to the table. All of them, I think, are more than 20 years of experience. Some are more than 30 years in this space. I think only Ashish may be the youngest one in the place. Otherwise, everyone is much more experienced. So we'd like to hear from them. I don't want to take the thunder. I want them to really share because they are all running amazing institutions. So how we'll do it is that I'll do a brief introduction, of each of the people here, and then ask a question. Sir, how we are proposing is that if each of you can speak 3 minutes, the idea is that we should take questions, and at least we should have 10 to 15 minutes of question answer session. So initially 3 minutes for each of you. Please try to be on time. I'm not maintaining any stopwatch here. So let's, oh, there is one. Okay, good. So there is you can see that obviously. So let's start. We start with Rahul, exactly in the center. So the center of attraction, I would say now. So Rahul comes with an amazing background of working for GE Money, GE Capital. And not only has he worked in India, he worked in Europe. He worked in, in Singapore, Malaysia, the entire, Asia subcontinent, I would say. And with the experience of a large corporate, then he came into, lead Avanti. Avanti is a very interesting organization. You generally, in the other segment, not financial services, you generally hear B2B2C. Others say B2B or B2C, and then you hear B2B2C, business to consumer, right? So I think Avanti is building a very unique model, which is B2B2C, through partnerships, collaboration, and really building an amazing business. They have got the best of technologies. They have got the best of brains to build the technologies. A person who has built Google Maps. So I'll leave it to Rahul to share how he's looking at this entire inclusion piece, what is the impact they're trying to create, and how the amazing technology they have built is going to change the landscape for NBFC sector.
Thank you. Good morning, everyone. It's a pleasure to be here, and thanks for inviting us. So when we talk about propelling forward to build a 5 trillion economy, I think we also have to focus on the fact that it has to be an inclusive economy. Now today, if you look at the NBFC sector, it encompasses pretty much everything from infrastructure finance right down to serving the last mile customer, corporate, leasing, SME, retirement, savings. So it plays a very important part in the entire financial services sector, which we're all well aware of. Now, in the spirit of creating an inclusive economy, it's very important that we make credit accessible in an affordable way and in a fit-for-purpose model for people who've been hitherto excluded. And that's a big chunk of our population, where about 100 million households have not been served by formal financial services, despite strong efforts by the government, strides made by banks, and of course a lot of the good work that has happened in the last 10, 15 years by the MFI sector. Now that's the sort of problem statement which was the genesis of the formation of Avanti, that how do you serve 100 million households and help them build a digital financial footprint. So what we decided was that in order to cater to this population, and let's look at some of the data around here, about half of India's population is employed in agri or agri-allied services. 60 to 65% of our rural populations or more are employed in, again, agri-allied related employment. 86% of the farms are actually smallholder farmers. And 70% of them don't get access to any formal financial services. So unless you have a very focused way of dealing with that problem, the idea or intent of building an inclusive economy will not happen. So we are trying in our own small way to try and address the need for affordable financial services to the underbanked and unbanked segment. And here are a few of the things that we have done, thankfully laid down and enabled by the fantastic digital public infrastructure that India has created. So we're building a model which is paperless, presenceless, and cashless, and I'll briefly talk about that. And happy to share more during the breaks, etc. But I'll try and stick to my 3 minutes here. So paperless is really basically hygiene. I think almost everybody's trying to do it, where you try to make the process very frictionless for the end user. And you have apps either in a direct-to-consumer model, or in our case, it's a B2B2C, where we realize that a lot of our customers don't even have smartphones. So at a household level, the smartphone penetration may be about 35 to 40%. But given that about 90% of our end borrowers are women, a lot of them don't have smartphones, or if they have, they don't have the digital knowledge right now to self-serve themselves or interact with an app. So the process is that we have created a network of partners across the country. So in some sense, while the delivery is purely digital, the inputs from the customers is done in a phygital model, where through our partner network, the end customers' information is onboarded onto our application through agents of our partners across the country. And of course, all of this is paperless. Even the agreement is biometric based, e-sign. So from a customer's perspective, it's very, very easy, and compared to traditional forms of lending, really service at a doorstep, and the process is completed in about 15 minutes or so. Presenceless, our assumption, which is has gained momentum, was that we have to leverage the power of community-linked ecosystem in India, and we have to move away, as part of our strategy, of building our own brick and mortar distribution, which we thought was an impediment to scale and of course adds to cost. So we have carefully curated partners, which could be smaller MFIs, which have great knowledge of credit processes, new age ag techs, where we become their embedded finance partners. It could be farmer producer organizations where we provide working capital to them, which gives comfort to the members of the FPO community, and other such networks that we have built. So we are today in 22 states, present in 250 districts, about a third of India's districts, without a single branch of ours. And that has, speaks about the scalability of combining technology with community ecosystems that exist on the ground in India today. And these community partners, or the host of partner networks that I spoke about, they do a few very important things for us. One is they help us access the target segment, which is the last mile customer. They help us give social trust signals that allows us to underwrite customers which are pretty much data dark. So 30% of our customers are new to credit, who have previously no digital financial footprint. And about 35% on top of that are customers who, because they may have been victims of circumstance in the past, which often happens at the lower strata of the economic pyramid, their credit scores are not as great as they should be. And in the spirit of inclusion, the question we asked ourselves was, do you therefore exclude them? Or based on the social trust signals you get from the ground, you still extend credit facilities to them and then see how the portfolio behaves. And I'm very happy to share here that it behaves very well as long as the signals you get from the ground are authentic. And lastly is this North Star that we have of being cashless. It's a long way to go. About 20-25% of our customers pay us directly digitally today. But this we feel is a very important part of truly empowering the customers, and in the future, as the penetration of smartphone increases, as customers become more digital savvy in their journeys. So we have already enabled the different avenues for digital repayments. And why it's important is that until you reduce the velocity of cash, the cost of credit will not come down as rapidly as it should. So those are some of the things that we have been trying, and we built a good proof of concept now, and we're ready to scale up. Thanks.
Thank you, Rahul. Very clearly you articulated what you are doing, and I think a lot of questions obviously will follow. But taking a slightly different part, coming from a solid fintech model to a slightly traditional institution, if I go to Shriram Housing Finance, I think for you, sir, Shriram has been doing multiple things, right? Housing finance is one part probably which you are leading, but apart from that, Mr. Agarwal, as a group, there would be a lot of changes that will happen. See, Shriram is known to be a very good customer-friendly organization, right? So from that approach to think of a very large, because you are also known initially much more on the south, then you move to the other parts, and then go towards the tier 2, tier 3 in different parts of India. How is the change happening within the organization? How do you see yourself as part of this big growth story of the Bharat growth story?
Yeah, thank you, Abhijit. So, Shriram Group started way back in 1974 with a chit, Shriram Chits. And then they gradually moved to commercial vehicle funding, mainly in the used segment, which is a completely ignored sector from the formal banking channel. So nobody in those days used to fund, or it was completely left to the local money lenders. So Shriram Transport created a market, created a financial channel for those unbanked people and those small-time truck drivers who are buying the truck for the first time, or the helper who wanted to buy his own truck and then start becoming an entrepreneur. So Shriram Transport helped them in doing that. Gradually in 1986, Shriram City Union came into force, which again catered to the unbanked segment in MSME sector, in small two-wheeler finance, unsecured loans, and personal loans. So there is a huge journey from Shriram Chits to Shriram Transport, Shriram City Union, and now in order to cater to the Shriram Group customers, we formed in 2011, Shriram Housing Finance was formed to cater to the housing needs of the affordable segment. Again, those are the part of the Shriram Group earlier, or to the new segment which was not being catered to very well by the banking system. So there has been a huge change in Shriram ecosystem, and Shriram is now completely, so with the, now the entity is getting merged. So Shriram Housing will remain the subsidiary as a separate entity because it's regulated by NHB, but Shriram Transport and Shriram City Union are getting merged, and the merged entity will be a large financial conglomerate having almost 60,000 employees, 1,70,000 crore of AUM with 3,500 physical branches. So, and almost 2 crore live customers, so they are serving with. So it's a completely different from the digital channel, but as Rahul said, but it's a completely brick and mortar model. But now Shriram is also giving a lot of focus on the digital sourcing, digitalizing the entire ecosystem, and they are launching a super app where the customer can be customer can have an access to all the products offered by the group in just one click. So with this, there might be a significant change in the dynamics of the way the group is working now. Thank you.
Yeah, so I think very, very different perspective, a branchless reach to a branch-based reach. So that's the beauty of India. I mean, you need all the models to come together and work, and we know the market is so large, we'll have to think through differently, right? Now coming to, the experience of Edelweiss in this. So how do you see, Mr. Tata, when you look at from a Edelweiss Group's perspective, the SME sector, you have a very, I would say, large range from a 2 lakh to 25 crores. I mean, I was very surprised. It's quite a big range you cover in the MSME sector. And obviously, the backbone of the economy is the MSME sector. And we always know that they struggle because of the working capital. But as an NBFC, how do you see the next level of growth here, especially looking at the working capital of these MSMEs? And how are you placed to take this in a very large way?
Yeah, thank you. Thank you for inviting us and the question. I think the MSMEs very clearly play a very big part in the GDP growth. We all know the statistics, whether it is 30% GDP, and many of you all may be surprised to know that it's the MSME sector which actually employs the maximum number of people in the country, right? So very clearly supporting MSMEs through credit. What is the biggest requirement today for these micro and small enterprises? And you have 3 categories, micro, small and medium. I think the medium enterprises, in our view, we can call them the achievers. In some way, they've got enough bank financing. They've been there 7-10 years plus, good profitability. There are banks very keen to keep lending to them. However, when you come down the pyramid and you look at micro enterprises, these are small companies up to 5 crore of turnover, small profitability margins, few people. They have a big challenge from when you look at traditional ways of lending to them. Therefore, I think this gap is filled up by the NBFC sector, and Edelweiss is also playing its own role, where we look at lending to these micro and small enterprises. One of the things that we've been doing, or rather I would say as part of this overall Bharat campaign, is to see how we can empower these entrepreneurs, because their biggest requirement is growth capital, right? And many of us sitting here know that you have a big missing middle. You have 63 million MSMEs, but more than 96% of them are micro enterprises. So, you know, what's happening really? Why is it that these micro enterprises are not being able to scale up and become small or other medium enterprises? And that missing middle has, I mean, it's a jigsaw. There are many aspects to it. But one key aspect is really getting the right financing at the right time. I think we are playing a last mile connectivity role, very important role for these MSMEs. Both the finance ministry, I think the regulator, the government understand that. And therefore there is encouragement. I think the ECGLS scheme, which was launched both for the banks as well as NBFCs, has supported more than 11 million MSMEs. And pretty much a lot of them, let me tell you our own experience, more than 85% of these customers who took the emergency loans have actually paid back on time, right? So therefore, I think just that right credit support during the period when they were not allowed to run their businesses has helped them, many of them, to continue the businesses after the lockdown got over. So I clearly see MSME as a growth driver and accelerator. And as we go along, we can talk more on it. But there are products, and as you rightly mentioned, our focus is the small ticket products. We do lend up to 20-25 crores, but I would say the USP and the growth that we see is in lending these small ticket sachet loans, micro loans, customizing them, making it digitally friendly, and using analytics to be able to offer it in a more seamless way. Thank you.
Yeah, I think good to know that the focus is on smaller ones, because that's where most of the capital comes in. The larger one are always chased by banks and bigger institutions. Now, taking a slightly different route, coming to Ajit, you are into fintech, and you are probably one of the early starters in this space of small ticket loan. And when I first remember that when you guys started, and we met your initial, the investor in China as well, the concept was that people who are employable gets a loan. I mean, that was sometime initially was very, very shocking that how can one think of that. But you have pivoted and you have really changed the way lending is looked at. So from that perspective, being one of the early starters, how you see this space, what are the challenges you see, and how you think you are going to contribute in this big demand in the market?
Sure. So I think the biggest challenge we had is to educate the customer and make him understand that the credit can be hassle-free, and same time convince or work with the regulator to be fully compliant. And these are the two things we have worked on: convenience to customer and comply with regulations, and always ahead of it, like whether it comes to the recent guidelines or previously when the KYC guideline has changed or any other time. So these are the two pillars on which we have built, and always focused on how we can expand the number of people we have in the formal credit system. Because as some of the previous panelists also said, right, I mean 2% of India is being changed by everyone that, okay, if you are looking for credit, we'll offer you the credit at the lowest possible cost. I mean, you hear about that number of calls and everything. But what we clearly feel that it's not the other 98% are not credit worthy. We don't believe so. And that's why we clearly feel that we can serve the other 98%. And more than pivot, what we have done is that we have grown with our customers. So when we started, our maximum ticket size was 1 lakh. Now it is 4 lakh. We are now serving up to 24 months, and it will increase with time, right? So as we have seen the customer behavior, it has given us more confidence, and we are present in roughly 90% of the pin codes of India. So one of the things is that what we have developed is we have made it hassle-free. We have made it scalable, where I think this distribution, you don't require branches everywhere, but you still are compliant with all the KYC regulations, right? So that's the model we have built, and roughly our aim is to roughly bring more than 20 million customers to the formal credit system by us in the next three years. We have already done roughly around 4 million, and we look to increase it 5 times over next 3-4 years. And in doing so, I think we have got investments from the most responsible corporate groups in India. So now we have investors like Premji, we have investors from Motilal Private Equity, and we have some large private equity firms like Mirayan. So I mean, that's how we have worked on, and the idea is the convenience to the customer and same time the compliance. And we have scaled in a way that customers, one of the biggest challenge for consumers is that they have a 9-to-5 job, right? So at that time they are not able to visit the branch, and when their requirement in instant, so you offer that services, and same time you work for the customer and work with the regulators. So that's the challenge, that's the motto.
I think very aptly said, convenience of the customer. So in the beginning, I was referring to the same thing, that you have to build your program around your customers. The moment you try to ignore that part, you are in for some trouble. So great to see that you are very focused on that side. And if we are very focused, I think the clients will be with us or the customers will be with us for long, which is obviously a hallmark of a good institution that they can retain their customers continuously. Now, tightly, I'll now come to Arindji to talk about his experience from a home finance or housing finance perspective. I think he's one of the person who has more than 30 years, I think, in working in the HFC space almost, right? So you have seen everything in the housing space. Now, how do you see that low ticket housing? And especially do also touch a bit about how do you see the regulation here? Because, mortgage is not easy. Equitable mortgage is not possible everywhere. What are the reforms also we need to do if we have to do low ticket, mass scale housing, especially in India? Normal, housing everybody knows, but what is the challenge there when you're talking of the Bharat, the tier 3, tier 4 cities, and how are we going to address that challenge?
Thank you, Abhijit. The topic of the day is building new Bharat with technology, right? So when we talk about new Bharat, I'll propose a theory of change here, what the philosophy which as a company we follow here. When we talk about theory of change, go to the recent past of last 2 years, there was a destruction because of COVID, which resulted in a lot of disruption. The disruption in technology, there was a reverse migration happened. People from larger cities, so-called India, went back to Bharat, which was so, as of today, is largely exclusive. Now, this disruption made this Bharat to become inclusive. A lot of companies started flowing credit there. The demand has risen, like we're talking about Credit B, Credit Fair. These are all demand-driven products they have launched in. We were talking to, Rahul was also speaking about from the Avanti perspective that credit-hungry sector the Bharat is. And that's where we started chasing the market. We saw that there is a disruption that happened in the smaller geographies. People have gone to smaller towns. They found that infrastructure is not supporting them. And there was a lot of need for the social infrastructure like housing. And that disrupted that we all, in the smaller housing finance companies, to get into those markets. And IKF Housing Finance, which I am CEO for that company, it's the only housing finance company which is based out of AP in Telangana. And predominantly, we are in southern part of India. So getting into smaller towns gives a lot of challenge because like rightly you were talking about that there are a challenge of creating a mortgage, challenge of identifying a title. But if you look at that new Bharat, that is exclusive India so far, has got inherited properties. The titles have to be derived from that. Now, when you want to derive titles from that, there is a legacy of flow of title. There is a deficiency in document, but there is no defect in title. Now, we as a housing finance company, we engage with the customers, find out what is the deficiency and how we have to remedify that. Now, getting to that level at remote becomes a challenge for us. So, of late, the cooling period of 2 years where the COVID had disrupted, we were doing very low, we invested heavily on technology. So, digitization has been a norm for us, a new normal for the company. So, last year, we implemented about 75% of processes to be digitized. Now, when we speak of mortgage or housing finance company, the criticality is completely different. Like if you look at unsecured loans, it's a 2-page product. But when we talk about housing finance, we have to evaluate legal aspects, we have to evaluate technical aspects of it, do an assessment because those people doesn't have a formal income. So we are trying to convert, as an NBFC, all of us here trying to convert the informal economy into formal economy, which will be largely contributing to our talking about 5 trillion economy going forward. So when we are doing this process, there are a lot of bottlenecks we come across. The only mantra what we thought, the digitization. So we have digitized the processes, their income levels and the trades. We get into the level of trade the customer is into, find out the surrogates which other industries is adopting of and come up with underwriting model. So largely these customers have very low bookkeeping, very low banking habits. Thanks to Jan Dhan Yojana and UPI enablements, a lot of money is flowing to a formal system where we can able to analyze and make it. Those are all things we are trying to get into the platform where the underwriting is easy and we can reach the last moment last mile lab. The third important aspect from the regulatory purpose is, yes, reaching out is very difficult. The cost is very high for us. Over and above that, the cost of capital is becoming higher for us. Now, as a housing finance company, we always have a challenge of ALM mismatch. and the cost of fund makes the credit delivery very costly. Now to make the credit delivery cost effective, the only thing is we have to make our cost lesser, and that only can happen through a digitized model. So these are the few things at an industry level, at a company level doing, and we are profound believers that a theory of change has to be followed. The lifestyle changes which is happening in the rural India have to be followed, and make a product which is very customizable, because India has got 33 countries, 28 states, and maybe 7, 8 union territories, 34 countries. So every way of doing things, culturally, is quite different. So if you want to have people to drive that, it will be very difficult. You have to standardize the processes to extent and regionalize the process to extent. So this can only happen when you have a data and implement on a machine learning models. So these are the next levels we are working on to create a strong database of the customers where we are into, have a surrogate understanding of database available in the public domain, and use to our advantage to delivering the credit to the layer.
Well, thank you. I think very interesting what you said is that how you are customizing it. I think I remember a few years back, somebody was doing rural housing finance, and they are doing only small ticket, basically home improvement. They went to the level of taking panchayat's clearance on the document. And that was a security probably, because the documents are never clear documents, or the title were not as clear. And
more than a paper, it is the identification of property, which is very easy in the rural areas or in semi-urban areas.
Yeah, and also in some of the states like Karnataka and all have done all this much ahead of time. So it's much easier to get the map there, even in a rural setup in the government offices. So I think some of them have really gone ahead really well, but not all states. Now, I'll come to you in a bit, because you'll have the last laugh, being the youngest technologist here probably in this panel. But coming to Amitji, your base has been more from a microfinance institution moving to the next level, because Satin is known to be a well-known microfinance institution, build a very large base, the earliest listed MFI, and as had the opportunity to raise 3 rounds of capital for your institution as well. So from that base to going into housing finance and building a very good portfolio as well. Something which I think, taking from Prahladji, Sikir Prahlad's one of the observations somewhere in his record, he was talking about listening first and co-creation. What I mean by that, are you, the experience you have on the microfinance side, did you listen to your client's need and customize your housing finance, or you went to a different target segment, and how you are building yourself for the next level? So that's the
thanks, Abhijit. As you rightly said, basically we are born out of microfinance. But when I was building up this housing finance, the only thought that we had at the group level was that the earning levels may increase for the people going forward, and joint liability group may have a limitation going forward because they may not be comfortable taking guarantees. So the logical transformation was that we have the customer base, we have 80,000 villages, we have 30 lakhs customers on base. It's a state-of-art technology that we have. So might as well build a housing finance company. So that was the reason because of which we originated, and you knowing the group very well. So when I formed this company, I was very clear that we are going to fund it to the retail customers who are going to use the house for their end use. So we don't do any builder financing, any APF, and we are predominantly 50-50 divided into urban and rural. But the best part on the practical side I would like to share is that we have tested 2 COVID cycles severely. But our microfinance portfolio on the housing finance, which is like 2 lakhs or 3 lakhs sub-level, at a substantial pace, has performed exceedingly well in terms of collections, and how do we do that. Already the veterans have spoken about the informal market. Of course, Satin is geared up for the last end of the pyramid, and technology is enormous that we have. The only challenges that I would like to speak on this forum is that yes, we can go to the last mile. At least we have that bandwidth. We are already doing it. Going forward, housing finance is going to be 50% of the entire portfolio of the group. So we are somewhere around 5,000 to 6,000 crore in the span of 3 years. Technology, anyways, it's a state-of-art technology we have in-house. So the only challenges that I feel from the housing finance perspective is that we are catering to the very last pyramid kind of a thing, whereby 20,000 or 25,000 maybe the salary for the people which are eligible for 1 lakh kind of a loan. I think South may not have the problems of the identifications of the property, but we do have a lot in the North. But we have certain safeguards whereby on the technical side we are able to identify the property and the titles as well. Rural has a lot of challenges in terms of OPEX also, but as I said that we have already been a very highly technological driven company, so collections, a lot of processing is happening online. And maybe as he rightly said, Mr. Shriram group, I forgot his name, we are also going to build up a platform whereby a lot of these products will be integrated on a single app. Yes, the future is fantastic for rural. I would say that is the market of the future. And we have come up with almost a very decent kind of a small mid-sized company in housing finance. Legal is something which really needs to be taken care of in terms of state levels and central level as well. Because if we talk of digitalization, I think the personal side of unsecured lending can go for a digital signature. But I think that part is missing for the mortgage industry, which may be quite a deterrent till the time it gets corrected for 100% digitalization. That is one thing. The second thing is the cost of funds. As most of the people are saying, it's difficult to get for basically the SMEs which are trying to come up. So some open facilities like the repo or the reverse repo for NBFCs or HFCs, if they can build up, of course, National Housing Bank supports us in terms of refinance, which is a very good window. But again, it has limitations for people like us to scale up. Otherwise, I think most of them have spoken it very nicely. That's the market for the future, and we are all geared up. I think we are a zero NPA company. Going forward, we want to maintain that. And I was very clear that it's going to be a credit-driven company rather than a sales-driven company. And 4 questions I always ask, and I build up in the team is whom to lend, what to lend, where to lend, and how much amount to lend. So that is the philosophy we are going to follow for long, and hope it pays off nicely. Thank you.
Wonderful. Great hearing that how a MFI moved into the housing finance and has a zero delinquency, which is unheard of generally in the market. So amazing what you are building, sir. So now coming to you, Aditya, I think you are building a very interesting institution, and I was super impressed by going through your website. You said that you are building a cutting-edge fintech lending platform for Bharat, and your vision is to see that every Indian have access to the right amount of credit at the right cost and at the right time, which is all very, very important. And you are one of the youngsters in the group now. I mean, you are obviously open to a lot of different ideas. So before I go into your thought of building this in a large scale, large institution, see, one of the things, Mr. Prahlad always used to, write or talk about is best practices to next practice, right? Because we are in the fintech world. KDB started some, 7-8 years back. We have a lot of experience from China. So when you're talking about the growth, can you share also that, are you thinking of the next practice? What should be the next practice? Because best practices we know now. We have seen China, we have seen a lot of things in India. So are you thinking of the next practice? Because we are really trying to build an amazing institution.
Thanks so much. Good morning, everyone. I think there are certain aspects before coming on the next practice. I think a lot of things in fintech will be old wine, new bottle. So as Sir just mentioned that, you have to be a credit-driven organization and not a sales-driven organization. So the basics of credit are not really going to go away, right? Doesn't matter what NBFC or fintech is coming up. We have to care about the customer. We have to care about the assessment. The right amount of credit has to be given. So that means that we have to make sure that we're not over-lending or compliance has to be there. So I think the basics will remain the same. The question is the delivery. For me, if I understand your question correctly, the next practice is how can that delivery be better using technology. And I think it's great to be in India and great to be building a business and fintech in India since the government has enabled so much, as Mr. Rahul just said. So, with the government having brought in Aadhaar, identity has become really easy, which everyone knows. And then UPI came in to make things more and more cashless. And now we're looking at account aggregator and other infrastructure coming in like OCEN. So we are really excited and looking forward to leverage all this different infrastructure coming in. And in parallel, of course, the RBI wants to ensure things are done in a very compliant way. So I think the next practice, which is compliance for fintechs, is really important. And I have spent some time in the UK as well before starting Credit Fair. So I have seen, a lot of the payday lending happening there. And a lot of payday lenders did give access to customers who were bottom of the pyramid. But then they did get stuck in a lot of compliance issues, a lot of complaints, and then many had to even go bankrupt just addressing the complaints, even if they were making money. So yeah, I think the next practice is how do we leverage the infrastructure in a way in a very compliant way, and really fill this gap in India where, maybe even if you look at, I completely agree that only top 2% are getting hounded with calls from all the banks and NBFCs. But if you look at it broader, probably 15-20 crore people have a good history in CIBIL. But that still means there are at least 50 crore Indians who are not having the right amount of credit footprint. And we're looking to play our small part in that. We are hoping to start with addressing about 1 million people in the next couple of years, and then over time keep plugging that gap of 50 crore plus, underserved Indians as the way we look at the market. Yeah, thanks.
Yeah, that's, I think always, I think slow but a steady growth is important. I think you are emphasizing that point as well. So I think we'll do a bit of question answer session in a few minutes. But I think few things to highlight here probably is that at the end of the day, we are saying the market is very large. There is no denying the fact. And as you know, many of the growing economies, the share of NBFC funding varies from 35% to 43%. And India, I think, Maheshji probably is not here, but I think we have not gone beyond 22, or is there? Sorry, I can't see you, sir. So I wanted to ask him what is the last number, but I don't think we are beyond 25% yet, right? So if that be the case, though the bank funding trend is very interesting, despite having so many banks, despite having so many SFBs now, I know we have 10 of them, despite that, the very surprising is in the last quarter report, I think it said the bank funding to NBFC has actually grown quite high, which means that banks are still not able to address the market. They have to depend on NBFC. There is no choice, right? So the share of NBFC funding to the overall credit in the system has to go up. The more we can increase it, the more the inclusion can happen, because by design, banks cannot reach that last mile. By design, the risk-taking ability of a bank is quite different than what as an NBFC we can be there, right? So I think one of the things coming out very clearly is that each of us has to play a role, a very large role. So we should be biased towards action. As Sikir Praladji always said, be biased towards action. So be action-oriented, do your work like what, Avanti has built a completely different model without having any branch. They have such a large reach in such a short period of time. Whereas it could be Shriram playing a completely branch game, having a very super app which can really take care of the client's need. So I think there is nothing like a right approach. The more important is, are we doing a collaborative and cooperative approach to build this together? So the end of the day, it's not that the winners take all. So big is the market. Everyone has a share to win, right? So I think with that note, I'll rather open it up to questions. And if time permits, later on maybe a few more questions to the panelists, if they're not enough. But I hope there'll be a lot of questions, so open to the floor. And please direct, if you want to direct a question to a particular panelist, feel free to do that. Or you can ask a generic question and someone from the panel can address that.
Good morning. This is John Morris from Chennai Chartered Accountant.
Yeah, can these lights be slightly dimmed or something, because we can't see. That's why I was not able to locate Mr. Thakkar there.
Yeah. And I'm thanking God and Dr. Ravi Gupta for this great opportunity. This session is in my life, this is a day one, I believe. Financial inclusion. I'm doing a research, inclusive growth through microfinance with special reference to one village, one CA. That is my dream. And we have started implementing. Across the world, we have brought every technology to India without human capital. That is my thought. I am working with MCA very closely, with the government also. So recently, we have started getting people with 100, 200 people to do CA, CMA, CS. The problem, wherever money is there, we have all these professionals. So every village, if we could able to get one CA, that finance inclusion will become automatic. So I am requesting this August body, particularly our Saturn, Mr. Amit Verma told they have got 80,000 villages. I would love to work with them. If you can give one student per village, we'll see that they are becoming one of the professional, and everybody will start right accounts. Even I have a case studies. We have written books also. I can share this to this August body. So this is the only solution for our country. 140 crore people are there. Average chartered accountant or other people are only 4,000, one person. UK it is 176 people, one person. That is a and developed communities in our country, 300 to 1,000 per professional. So with this, I just wish to work with everybody. Thank you. Thank you so much.
Can I request the audience to please share questions if we have these discussions? We can do it, in our break. Any questions for our panelists here? Can we have the mic at the front table? Okay. I'll get to you, sir.
Hi, good morning. My name is Mudit. I am founder of Synoric. We are building loan management softwares. So my question to the panelist is that so if you are trying to build $5 trillion economy, and isn't EMI kind of repayment schedule a problem in scaling up? Because I give you an example of one of my uncles. He runs a shop, he sells coolers and ACs. Now for him, he has a fund requirement in January or February, where he procures the coolers and ACs at cheaper rate. And then he has his maximum sale in April, May, June. And so that is the time when he can repay. But if we go for an EMI kind of repayment schedule, then he doesn't have enough cash flows in the monsoon season or the winter seasons. Similarly, if we take example of, wedding stores, they have better season. Their seasonality starts from after Navratra. So can we also, is anyone trying to do away with the EMI concept?
I'm happy to take that. So when we were conceptualizing the delivery model in our company, one of the things that we came to a reasonably swift conclusion was that if you want to create hyper-local products, which caters to the same kind of challenges that you said, that a farmer who monetizes the crop 2-3 times a year, you can't have an EMI product. You could have a trader who wants to repay every day. You could have somebody else in the cohort who wants to pay once in 2 weeks. So you have to have loan management systems that are fairly hyper-flexible. So in this debate between buy and build, that's when we decided to completely build our own platform. So for us, we have a pretty hyper-flexible LMS where, whether it's payment daily, bullet, quarterly, weekly, customer wanting to choose their own days of payment, it's all built into it. And I think your point that you can't have a standard EMI product for everyone, I think everybody well appreciates it. The question is, how do you build the enabling technology behind it, which becomes part of your value proposition? So in Avanti, we've done it, and I'm sure there are many others which would have built that flexibility as well.
I think Rahul, his point was more probably, please correct me, but your point was more probably from the structure perspective, because as of now, the RBI regulation doesn't permit you to keep it open-ended. You need to define a period, right? Even if you are doing a line of credit, so what we do in a corporate lending setup, when we are giving a crore of loan or something, in a corporate, which is like a small SME, say, which is a corporate structure, You can give a line of credit defined like whether they pay in 30 days, 60 days or 90 days, but you cannot keep it flexible to say they will do it in any time they want, depending on their sales. That is not something which the regulation today permits. So the moment regulation permits, that's what actually, if you look at it, the banks do, right? They keep the limit and you can take the money whenever you want, you can pay the money, the overdraft or the cascade limit, what they talk about, right? So I think it's a regulation issue, and also it's a tedious management issue, because the more you become flexible on the product side at a granular level, the cost increases. So first of all, the regulatory challenge, second is the cost challenge. Yes, it is the need of the hour. That's why if you look at it, let's take the case of agriculture sector. You know, why there are not many NBFC in this space? I mean, if you leave apart a few Samunitis or the collateral management or those type of warehousing finance companies, where is the agriculture defined products today in the market by an NBFC? It's not there. And Samuniti can also do it because there is a buyer who is buying in bulk. You know, in between the entire value chain they have tied up. But on a standalone basis, if you are just an NBFC going to lend there, and with the farmer to say some farmer needs exactly 3 months, some may need 3.5 months, some may need a 4 month. So it's, I think, the regulation which has not yet helped us a bit. We have to work on that. It's a bit complex problem from that perspective. But yes, if you can do that, then we are like a bank, which we are not today.
Sir,
I'll add.
Yeah.
See, there is an EDI product already, right? So, equated daily installment. So, you have swipe machines today which actually take an EDI and do that. And I think what you're talking is about data tagging. If you know which set of customers need this, like you mentioned your uncle who is into air coolers, you'll have probably some Kirana stores who are selling only books and, let's say, school bags and all. Now, again, they have a seasonal requirement. If you data tag that well, then you have the ability to go out and, if it's your customer, offer them these loans, whether you call it WCDL, whether you call it short-term loans, whether you call it seasonal loans. There's an opportunity for you to build customization, but he's right. At the end of the day, you need to see how much customization do you want to do, because it also, there's a cost involved in that.
So can I have a 5-year term loan with repayment only in April, May, June? So this is
yes.
what I'm talking about.
Answer is yes. If you have defined ahead of time, you
Yes.
can't keep it flexible. Today I'm saying 5 year, I'll pay in April, 30th April, 40th June and 15th September. If it is defined ahead of time, answer is yes.
Yes, a predefined repayment schedule, but
Yes.
inbuilt seasonality. For example, if I'm in the lehenga business, then I will be able to pay only in, say, September, October, November, December. And this I will do every year for next 10 years.
Yeah, so what you can do is, you can opt for the structured EMI. See, there cannot be zero payments in the other months, because then you will not be serving the interest and your principal keeps going up. So you can have a structured EMI where you can serve only the interest in the residual months, and in your seasonal month you pay the full EMI.
So like what you can do is like what we do sometimes is called a step-up function. Some we say, payment towards the end, like bulleted towards the end, not a one payment, but like say 3 installment, but in the loan is for 12 months, you only pay 3 installment, but all the 3 installments are towards the end. Interest you service monthly or quarterly as the case may be, mostly monthly.
So Abhijit, I'll add some more here. So we were doing a commodity financing in NCML Finance. So we had defined or designed a LMS to suit that commodity finance. It's more or less equal to loans against shades. So we mark to market, we give the flexibility. In the beginning, we ask the customer whether you want to service the interest on quarterly basis or a half-yearly basis or end of the tenure. However, the tenure doesn't last beyond 1 year. So this flexibility we have built in, it was a customized product for the company.
That is why you will also see that, in the RVF companies, the revenue-based financing companies, actually NBFCs technically cannot do it. Some people are doing. But if you look at from an RBI definition perspective, you don't have you will take only 10% or 20% of the revenue. But how will you structure it from that whether it is coming on time, exactly amount or not? How will you define overdue? How will you define that it is in default or not, right? So that's why, it's a bit tricky issue here. Yeah, please, go ahead.
Yeah.
Yes, sir.
So this is Mitesh here. I am founder of Miss Call Pay, which is actually a UPI 123 based payment solution. But my question to the August audience here is actually, the people are here, is actually RBI has released a new master direction where actually you can, the NBFCs and banks can now give loans to people without CIBIL, right? But there's a psychometric assessment or something. So any adoption by NBFC as a fraternity to give loans on that basis, actually, at the same time, there are also some NBFCs have taken measures where actually they are giving, asset lending, particularly like mobile phone or consumer durable lending, where actually what happens is if that fellow does not, the borrower does not pay the EMI, that phone stops functioning. So what is the that functioning so that actually so that they can recover so that he's not able to use it. So actually, and so what is your viewpoints as to on these practices by some of the lenders that have been done? You know, yeah.
See, I don't think so anybody can stop the asset functioning, the second question. And first is, I think there are first-time borrowers who doesn't have any CIBIL, so new to credit. So most of the NBFCs are, after doing a proper personal discussions and income flows, are funding them. And in the case of, especially if I were to speak about the rural markets, then maybe their habits of depositing the EMIs are very bad. And as the gentleman also said, I think, so you can disburse them in the bank, but their banks are very far away, so their operational abilities are very bad. So collection happens in these small loans, 80% on the cash basis. Of course, that is the effort to make it cashless. So in there also, if there is a lot of bouncing and your CIBIL scores gets a little bit distorted, but you are good in the repaying capacities, people are funding it. There is no issue.
Also, it's your risk defines whatever customers you take. Otherwise, many companies fund people who are in distress. How will they fund it?
Absolutely.
So it's up to the organization to define what risk they are going to take and define their parameters of taking risk.
Correct.
One could be NTC, one could be default customers. If they think they can bring them out of the default because the business is now growing, they can take that call. So
only thing is, in the case of write-offs of willful defaulters, I think most of the companies are resisting. Otherwise, based on the customers' performances, they are taking the calls. And that is the market for the lowest end of the pyramid, because we don't fund 870 kind of customers on the civil side. So I hope it address your concerns.
So when we started traditional lending, now the way back 25, 30 years back, there was no CIBIL. Nothing was there. It was judgmental credit. Now as we evolved, technology evolved, we started gathering the data, and CIBIL and all are data points for you to decide. Whether you want to decide, adopt is up to your credit policy or risk policy. Now RBI wanted to emphasize that we should not insist on a different perspective for that. Right? Like new to credit, or you go into rural, there will definitely no imprints. If you go to microfinance area, the first GLG group they make, I think they will not have any credit imprint there.
I think we don't have any more time, just it's about 30 seconds.
On my question that, one second, on that asset locking, so there are already companies like Samsung and all that where mobile phones stop functioning once you delay your EMI or do not pay your EMI on time. So any viewpoints actually where NBFCs want to adopt this kind of a technology, or they are averse to do that, or?
Yeah, I've heard of this. So there are technology providers who had enabled it. But I think as per new digital lending guidelines, probably a lot of lenders will not be open to using such technologies, because RBI is pretty clear that if as a regulated entity, you should only access very few functions on a phone. So yeah, I don't know if it will be very common going forward.
Not on the phone, but on the asset?
I think even on tracking location of a vehicle, right? So I think even HDFC Bank had actually fallen into trouble. So yeah, I don't think it'll be very common, and I'm not sure how widespread it will be. But I mean, that's my personal view. I don't know overall as an industry.
Yeah, I think just conscious of the time because the next panel will start. I'll end with a small, very interesting thing would happen today when I was flying from Bangalore to Mumbai. I went to the lounge, and bumped into Chandrasekhar Ghosh, Bandhan Bank's chairman. And why I'm saying this is a bit relevant here. So when I started working with him in 2002, when he was an NGO, we gave him a 20 lakh loan those days. And from there, in the just a decade and a half of journey, from a zero technology, there was nothing there. Everything was in his mind, to moving into an Excel, to a very basic technology, to what they have built today, and the scale they have reached. So he was working, why I'm sharing these stories, he used to work for a NBFC called Village Financial Services. He was the chief operating officer there. He knew that the institution will not grow, and he pushed them, they didn't grow. Then he decided to do it on his own. Started with the NGO because he didn't have capital. And the sheer grit, the sheer vision has led him to where he is today. So I think without any money, without any technology, without probably having any other co-founder with him, it was a small team he had built on his own. He has built something but he did a very interesting thing. He brought in a collaboration. That's why I was talking of cooperation and collaboration. From day one, he knew that for him to sell in the market would be difficult. So he brought in Asha Bangladesh from day one to help him in the first 2 years to build his system and process. Because Asha had a brand, he could scale. So with that note, this was a positive one because we have seen how Bandhan has grown. See, there may be certain questions about the way they work and all, but I think the overall thing is, the way they grew from a small institution to where it is today is mind-boggling. And I think it's a sheer collaboration, cooperation, and the mindset. So the positive mindset and action-oriented is very important. Again, going back to Mr. Prahlad. So with that note, we'll end. Thanks a lot for being a patient, for giving us a patient hearing. And thanks a lot for the panelists. I couldn't have asked for better than this panel. I mean, amazing people. Please let us give them a big round of applause. Thank you. Thanks a lot.
Thank you. Thank you so much, Mr. Ray, for orchestrating this session. I'll request Mr. Mahesh Thakkar and Dr. Ravi Gupta to please join us on stage to present a small token of appreciation to our esteemed gathering here, who have enthralled our audience and given a very, enthusiastic kickstart to discussions here at the 12th NBFC 100 Tech Summit. Can we have, may I request Mr. Thakkar and Dr. Gupta to present the memento to Mr. Abhijit Ray, co-founder and managing director, UC Inclusive Credit. Thank you so much, sir. It was wonderful having you with us. Can we have a round of applause, please? Mr. Meheran Nosh Tata, Managing Director and CEO, Edelweiss Retail Finance Limited. Thank you so much, sir. Wonderful to have you with us today. Can we have a round of applause, please? Mr. Amit Sharma, Managing Director and Chief Executive Officer, Satin Housing Finance. Thank you, sir. It was wonderful to have you with us today. A round of applause, please. Mr. S. Arendra Kumar, Executive Director and Chief Executive Officer, IKF Home Finance Limited. Thank you, sir. It was wonderful to have your thoughts with us. Mr. Rahul Gupta, Chief Executive Officer, Avanti Finance. Thank you so much, sir, for being with us today. Round of applause, please. Mr. Aditya Damani, Founder and CEO, Credit Fair. Thank you, sir, for being here with us today. Mr. Ajit Kumar, Chief Operating Officer, Credit Re. Thank you, sir. Thank you for being here with us. And Mr. G.S. Agrawal, Chief Financial Officer, Shriram Housing Finance Limited. Thank you so much, sir, for gracing this occasion with your presence. May I request everybody to please join us for a group photograph.